Hey there, my name's Curtis Lucas and you're watching Empire Building. Now, in this episode, I'm going to be talking about the stock support.com, which recently went through a reverse merger. Now, for anyone that's been following the stock or, God forbid, invested near the top of this thing, we've seen this stock move from as low as $2 all the way up to $60, only to tumble nearly all the way back down again. So in this video, I'm going to do a post-mortem analysis on this company and this stock and explain exactly what went wrong here, what happened, and what so many people misunderstood when it came to this transaction, this reverse merger that took place. Because there was a ton of misinformation floating around out there. And even to this point, I think there's a large number of people who clearly just did not understand. And unfortunately, I'm going to count myself as one of those people because I did enter into this stock just before the close, the day before the merger happened. After witnessing the stock fall 40%, I thought surely this is just a sell the news event. Only to see today the stock tumble yet another over 50% from yesterday's close. So we're going to be diving into the good, the bad, and the downright ugly.
You're not digging? Why?
I'll tell you what. Because there's nothing in there.
Now, even if you weren't involved in this company or had no interest in this company whatsoever, this is still extremely valuable because there's some very important lessons learned, and for some people at great cost. So do yourself a favor, listen to this video the entire way through, and I promise it'll be worth your while because it's going to serve as a very important case study. So if anything like this were to ever happen again, you'll have a much better understanding as to what's actually happening and the things that you need to be aware of. Now, I had actually mentioned this stock just over a week ago in my last video because one of my Patreon supporters in our Discord chat had actually made off with over just about $1 million in a single day, one trade on this stock when it mooned straight up to $60. He managed to realize $1 million in profit off that one single trade. And I do still plan on doing an interview with this individual. That'll be coming very soon, especially now that we've seen how things have developed since then. But obviously, it's very easy to understand what drove the price to such extreme levels in the first place. In today's meme stock culture, there's this sort of event keeps happening over and over and over again. We find that a lot of retail traders sort of hone in on these stocks with extremely high short interests. And depending on what sources you're looking at, the short interest in support.com was reaching anywhere between 70 and even up as high as 97% right up into the merger. So of course, the expectations were pretty clear here. Even after the fall back down, as we've seen with many stocks like AMC and GameStop and many others, it's rarely ever be turned into just a simple pump and dump. It becomes a battleground between the shorts and the longs. And let's face it, in that circumstances, the shorts are at an incredible disadvantage because they have to pay enormous interest rates just to maintain their positions. It was said on support.com the interest rate that these traders were being forced to pay, these short sellers, reached levels as high as 150% per annum just to maintain those positions. Yet they continue to pile in. Now, I wish I could say I had carefully studied this trade before myself choosing to enter into that position the day before this merger had actually taken place. But sadly, that was not the case. To be honest, I was a little occupied at the time working on my other projects, and I simply just took a swing at this. It wasn't until after hours that I had some time to sit down in front of the computer and dig into the research. And what I found actually gave me a significant amount of pause and some concern over what would actually happen the following day. Because As I mentioned, for me, the reason why I entered into this, my average cost entry was about $13, which seemed like a pretty good deal at the time. At the close of the market, just before the merger on Tuesday, Support.com had a market cap of approximately $286 million. So any of us that have any experience evaluating Bitcoin miners, this is obviously incredibly low. By comparison, a miner like Marathon Digital Holdings didn't have a market cap at that level since it was valued at approximately $3 or $4. And here we have a company that not only mines Bitcoin, but also owns and operates power facilities. So obviously this is incredibly undervalued. And then add to that the fact that this company had nearly over 90% of its float sold short. It seemed like the perfect formula, the perfect storm. Add to all of this, and there was a lot of misinformation floating around pointing to this chart, suggesting that when the stock began trading under the new ticker symbol, GREE, that the stock price would open at the proposed maximum offering price per share at $202.96, which would have been an equivalent value of approximately $23 or so. This got a lot of people excited. Unfortunately, as we now know, that's not how it worked. The reality is a stock, any stock at any time, is only worth what anyone's willing to pay for. At any given time, fundamentals have very little to do with anything. So let's just take a moment and break this down. The reason why this trade fell apart was that people didn't understand what this transaction was, this reverse merger. So this is what's important to understand about what a reverse merger is. A reverse merger is one of the methods for a private company to get listed on the New York Stock Exchange or the NASDAQ. Other ways that you may be familiar with is obviously an IPO, but this takes at least 1 or even up to 2 years to go through that process, which is extremely expensive. Another way is through a SPAC, which has become very popular but also very controversial these days. A third way is through a reverse merger, and this is where a private company purchases a public company. Usually the private company is significantly larger than the public company, as it is in this case. The private company is the power generating Bitcoin mining company, Greenidge, and of course the public company being Support.com. In their investor presentation, where they described this merger, this was the important piece of information that many people did not understand.
Pie chart on the right shows our pro forma ownership following the transaction. After closing, Support.com shareholders will own 8% of the shares of Greenwich Generation Holdings, Inc.
So that means that you need to be very, very careful when looking at the market cap of Support.com in relation to what it will become after the merger. This is why for every share that you own of Support.com, you would be issued 0.115 of a share of the new company. Based on the new total number of shares available, that's how the conversion worked. But the bottom line is the new company is going to be valued at some amount. And as it turns out, that opening value was $58, not over 200 like many people thought that other document meant. Those documents, when they referred to those values on those tables, those were purely for conversion purposes, trying to figure out how the math for the conversion will work based on different stock prices. It wouldn't change, like if the stock of Support had remained high, it wouldn't have changed how many shares would have been issued. It just would have affected the corresponding perceived value of Greenwich, the private company, at the same time. I'm not sure if this is making sense to anyone, but there was one table that really highlighted what this meant in their investor presentation. This table right here spells it all out. The price that everybody thought this new company was going to open at was about $200 a share, which corresponded to about like $23 a share, like I said. So even higher than this table even went. Keep in mind, this table was produced back in March when this merger was announced. At $20, that would give an implied post-closing Greenidge market cap of over $6 billion. That may be a whole lot harder to justify, but at the closing price that we found when I actually made my purchase, which was around $12, that put it at a post-closing valuation of about $4 billion almost. Still pretty stiff, perhaps. Well, as it turns out, it definitely was, because in trading during today's session, it reached as low as $40 a share, which corresponds, if you were to do the conversion back to the corresponding value of support.com, that would have put it at approximately $4.52, right around this level, which puts the valuation of Greenidge now at just over $1 billion. So now you can see that trying to evaluate it based on the market cap of support.com is difficult to do unless you're aware of this information. But what about the short interest? What about all of those shares that were sold short in support.com? Well, unfortunately, in the private company, which now actually possesses about 92% of all the shares of the new company, that means that in its current state, only 8% of that float of shares at most now are sold short. Well, that's not a short squeeze candidate anymore. Obviously, the short sellers understood this, meaning that they could pay those enormous finance rates to short those shares. And all they had to do was hold their positions until the close of that day. They knew what was going to happen. Unfortunately, so many others did not. And unfortunately, I have to count myself in that, although my loss was significantly less than many other people. And to be honest, I do kind of like this company, and I added even more to that position. Near the bottom, actually, I managed to pick up another 1,000 shares at $40. So unfortunately now, the short interest thesis on this is no longer applicable. But at this price range, is it a buy? As I mentioned, at the current price point, that puts its valuation somewhere between around $1.4 billion. It's actually difficult to actually identify that right now. The information floating around out there right now on the market cap for this company currently puts it at $286 million, which is actually the market cap of support.com. So you have to be careful when looking at some of that information out there. It hasn't been fully updated yet. The actual market cap of Greenidge Generation Holdings is, like I said, closer to maybe 1.5 billion. But after all of that, does that mean we found the bottom? Hard to say, actually. Like I said, at any given time, a stock is worth what people are willing to pay for it. And in this environment, there's a lot of fear, uncertainty, and doubt because there's so many people that got into this without understanding what it was. So it's difficult to say what capitulation will look like in this environment. But what is it worth as a long-term hold? And that is a whole lot easier to justify. Currently, this is a company that has 2 locations. One currently in operation, running at 106 megawatts. That's 1 megawatt larger than Marathon Digital Holdings' Hardin plant in Montana. So if you simply run the math on this sort of thing, you find that a valuation between $1 and $2 billion, and as far as I'm concerned, is probably a steal here. Currently, Greenidge Generation Holdings owns and operates a power plant in upstate New York sized at 106 megawatts. I wanted to do a quick check to see what would something like that be worth on paper. So a quick Google check for the approximate cost to build a power plant. This source puts that range somewhere between $5,500 per kilowatt hour to $8,100 per kilowatt hour. So the 106 megawatt facility that they operate in upstate New York would be valued at somewhere between $583 million and $858 million. Now this is just a ballpark figure, but it's just to illustrate the example of the fact that this company has significant assets. On top of that, we learned from the investor presentation that the combined companies post-merger would have a net $70 million in net cash. and a current hash rate of already over 1 exahash. We also know that they plan to expand and increase that hash power to 2.6 exahash by the end of 2022. Now that does put them significantly further behind a lot of the other players out there, but they do have plans to aggressively build out beyond that to 500 megawatts in total capacity by the year 2025. And largely this is a miner with the lowest cost to operate than any other miner can. They mine behind the meter, generating their own power to mine Bitcoin. But obviously they're going to need an injection of funds in order to fund that type of growth. And sure enough, in this filing issued today, September 15th, they've announced a $500 million offer to one single investor. Now, I read through this document, and what I found, this was very interesting and very telling. And I'm not sure how many people have picked up on this, because they're not just simply raising $500 million. They're doing so in a very specific way. We've seen many times these companies do at-the-market shelf offerings, where they just sell into the open market during trading hours and raise capital that way. It puts enormous amount of down pressure on a stock. Certainly something that this company can't afford to do right now. It's already been punished enough. This agreement means that Greenidge Generation Holdings is allowed to sell their shares to one specific investor, up to a maximum of $500 million. But the number of shares is also capped at a maximum. In no event may we issue to B. Riley Principal Capital under the purchase agreement more than 7,668,250 shares of common stock, equal to 19.99% of the combined shares of Class A and Class B common stock. Interestingly enough, if you take $500 million, divide that by that number of shares, you get a number of $65.20 per share. So obviously when they set this agreement up, their perceived value for this company was closer to $65 a share, currently trading at low 40s. And also keep in mind that in this document, the method in which they will issue these shares or sell these shares would be by choosing when to sell and at what price. The purchase price of the shares of common stock that we elect to sell to B. Riley Principal Capital pursuant to the purchase agreement will be determined by reference to the volume-weighted average of the common stock, VWAP, during the applicable purchase date on which the company has timely delivered written notice to B. Riley Principal Capital directing it to purchase shares under the purchase agreement, less a fixed 5% discount to such VWAP. So the point here is that they're going to be taking a weighted average cost or price of the shares, whatever they're trading at around that general time, and apply a 5% discount to sell those shares to this investor. Once they've sold over $200 million worth of shares, then that discount goes up to 6%. So to be clear, if they want to raise the entire $500 million, they'd need to wait until the price rises at least 5% above $65. But the fact that they set this agreement up in this way, to me, suggests that these companies, both the investor and the company itself, believe the true value of this company is closer to $65 a share, at minimum. Now, whether or not you think that's the case is up to you to decide. But either way you look at it, we are looking at a new entrant into the space, and one that has a whole lot of growth in front of it. And one thing's for sure, they definitely know how to make an entrance. So I did my best to do as thorough a deep dive into this as I could. I'm sure there's plenty that I missed. If there's anything that you're aware of, feel free to share it down in the comments. Maybe even share your horror stories or your victories if you happen to be on either end of this trade. Sometimes misery loves company. I'm really trying to get back onto a regular schedule of uploading videos. So if you enjoyed this, please leave a like, share it with anyone you think it might find it useful, and I'll see you all in the next one. Now let's get back to empire building.